Good evening, everybody. My name is Daniel Young. I'm the owner and founder of Adaptive Perspective and the Adaptive Perspective social media platforms, and I am back to talk about our stock market investment strategy using closed-end funds. So to get the normal disclaimers out of the way, this is an unedited video. Who knows what you'll hear in the background as I film these in my house. And I am not a financial advisor. I am a financial strategist, and I don't talk like the herd. I don't talk like the people who talk to the herd. I walk in limited company, and sometimes I walk alone. Um, the quick review for the week is that it was a productive week for me. Things got busy at school. It's pretty much the standard for the week before Thanksgiving break, but I still got a lot of work done personally. I still got a lot of work done on my book series and the evening cough. Um, so making progress. I just need to keep up that progress or maintain that progress over this upcoming Thanksgiving break. Um, for the session today, I will share my screen momentarily. Um, I thought about how to make this video because, I mean, y'all know me. I hate saying the same stuff every single week with little change. It makes no sense to me to say the same things over and over. But I've reached a point where, and no, I'm not going to say the same things over and over, but I've reached a point where I'm struggling to comprehend the mindset of the herd and their handlers. And there's no explaining the current market. There's no explaining the current market. I can break it down a little bit, but I can't rationalize it. So I'll share my screen. You can see that I've got a lot of tabs open. You can see my script today, which is pretty much non-existent, and we'll talk about the list. So first things first, let's see if I can find the share button. So this is my script for the week. I have a script for every single recording I've ever done. Plus, I've got a somewhat pre-done script on when I update the portfolio. So I don't really have a script today. I've got the same intro and I've got the conclusion, but that's it because I refuse to say the same things over and over. And I even looked at Gemini. Like, why is the market so fearful right now? I mean, the CNN Fear and Greed Index doesn't dip this low much. It's drifted that low more. And I think that's just because the herd itself lacks wisdom. And we've talked about that. The need for common sense across the board is hard to instill if the herd itself is not chasing wisdom. And that's not the mindset, that's not the psychological, um, that's not at the psychological forefront of the herd. They're going to other people for information. They're not willing to dig. They're not able to think. They can't process. They can't look at things logically. They can't look at things analytically. And because they're not willing to acquire wisdom, we're seeing the fear porn, really the fear porn itself pushed from the media, but also that overall jitteriness of the herd. We're seeing that spread, and we're seeing it spread more often, and we're seeing that fear spike more often. So why are they so fearful? One, yes, these are the reasons that Gemini made, but there's one fear that's not listed. It's the fear of loss. The herd is in for quick money. They put in money late, they take out money early. So when the media or where the herd's handlers really start pushing fear, like this idea of an AI bubble, the herd, it's like they pick up ears. It's like they have a sensitive radar for that stuff. and it gets their heart racing and they have anxiety and they've got PTSD from the last time the market crashed and they have PTSD from the last time they took out money both early and they put in late, all that stuff. And it just cycles inside that overall investor consciousness that they have. And it grows and it festers. It's like black mold. You can't see it, but you know it's there. And it just spikes your worries. The herd hates losing money. Now, we all hate losing money, but you and I have a different sense of risk. We have a different tolerance of risk. We are risk averse, but at the same time, you and I know the market's going to go up and down. And every single chart that's pulled up there shows that everything goes up and down. Now, you can look at it, you can take a step back. Sometimes you might have to take more steps back, but you'll see for the most part, it goes up. Everything goes up differently. Some of these stocks are like break even on the year, right? But if we take another step back and spread out the chart even more, for the most part, everything goes up. The herd doesn't see a long term game plan, they don't see a step back vision. They see everything as close as possible, and they're almost trying to time the market. So when things go bad, AI bubble, that gets them fearful. And the more they hear about it, the more fearful they get. So they sell, and then more of the herd sells, and then they all sell, and then this sells, and then that sells, right? And the market dips. And for us, we see the long term picture. The market's going to sky, the market's going to drop, right? It's going to be high as the clouds and then subterranean. So on our end of things, if we're always interested in investing, we're going to catch it at different times. That's where that dollar cost average comes in. You're going to buy it lower, you're going to buy it higher. And yes, honestly, I would love to buy below my overall buy-in average price. But at the same time, if that happened, then it would never gain. So it's going to bounce up and down. So when the herd freaks out, perfect in a way. I mean, we don't want our stocks devalued, right? We don't want them to lose value. But at the same time, in the grand scheme of things, we're holding for a dividend or pending your format, pending your strategy. Maybe you're holding something for 20% gain, you sell it, you push the money forward, right? Maybe you're holding something short term, maybe you're holding something long term, but we're holding it knowing at some point it's going to go up. That's the hope of the market or the hopium of the market. But we're also buying stocks that we can scoop a great deal on now, knowing it's going to be impactful or make gains in the coming market. We're not just buying anything willy nilly. So we're buying now. We're still receiving a dividend. We're getting paid regardless of what the market does. So as all of these different stocks are down right now, we're still getting dividend money, right? Versus the herd is scared because the market's down and they're selling. So let's use their fear and buy. And what you buy really depends on your overall strategy. So I took the normal list and I cut it down. So I took the normal closed-end fund master and I did it all by target, and I put all of these targets in a different spreadsheet and I ranked them. Initially, I ranked them by dividend policy, and there's nothing on a quarterly style setting that's interesting right now to me. Next, and so they're all significant, right? Next, I rank them by yield, and I cut out everything that was below 9%. And then I trim the list down based on the targets: bonds and bonds proxies, utilities, end-to-end energy, and US dominated funds, because money is still pouring into the US, but not end to end, US dominated funds that are tech based, that also aren't the major players in tech. Because, yes, Alphabet, Amazon, Apple, Nvidia, Taiwan Semi, all these different companies, all the big tech companies, that's where the herd is looking for that supposed AI bubble. And NVIDIA just reported earnings. No scare there. But the herd is still freaked out because all of their handlers are saying tech bubble, and it just doesn't go away. So why is everybody panicking? There's I'm not going to read this to you, but it's what we talked about last time. Are tech stocks overpriced? Yes, but that's really no change. The profit to be made, I mean, yes, the big guys are going to grow, but the real profits, accelerated growth will happen in that small to mid-level pack. Changing Federal Reserve policy. Look, Jerome Powell has fucked us all over. He's controlled the market for his whims. He's not looking at data, and we have the proof of that. He cut rates before an election when the data didn't suggest the rate cut. Why? Well, that makes the incumbent look amazing right before the election. And the incumbent was not amazing before the election. And then when the data said he should cut rates, he left rates high because, quote, he was uncertain of the tariff market. But then later came back and said the tariffs don't really have any impact on inflation numbers. So, yes, the big guys are overpriced. Federal Reserve is cutting, they're maybe not cutting rates the rest of the year. They should be cutting rates. GDP is going up, inflation overall is going down. They should be cutting rates, right? And quite honestly, Jerome Powell should lose his job. I mean, Trump could fire him, but at the same time, he's still going to be in the mix. But we need a Federal Reserve chair who's actually going to follow the data. That's what we need. Jerome Powell does not. The geopolitical risk is still always there. It's ever present. Nothing's really changed. It's gotten better. Have you seen how many peace treaties President Trump has negotiated? Right? The work he's doing in the Middle East. That's for the first time in, first time in forever, the local Shell gasoline prices have dropped. Exxon has been cheap for a while, and cheap in relation, cheap in relation in the sense that it was like 230, 240 a gallon, which I would love for it to be about 60 cents less. But Shell oil, for whatever reason, was still higher. This week, Shell oil is 220 a gallon. That's pretty damn good. So the geopolitical risk, like fear of what? I mean, let's cut off Ukraine. Let's end the Russia-Ukraine war. The Middle East is getting more solidified by the day. I don't understand. I mean, our biggest geopolitical risk is that we don't want the UN controlling US policy. And that's a good thing. And tariffs don't have any impact on inflation. Uh, as of last week, President Trump was talking about sending everybody. Now, what the age cutoff is and how all that works, I have no idea. But he was talking about sending everyone a U.S. tariff benefit or a U.S. tariff dividend of $2,000. And if that happens, then that tariff dividend of $2,000, however it's applied, you and your spouse, maybe your kid, I have no idea. But just remember, it's dividend money, so that's really income, and it's going to impact your taxes next year, or I guess this year, but next year when we get to them. Or penny if they're paid in 2020, if they're paid in 2026, then it will impact 2026 taxes. So I get Gemini's explanation that this is a perfect storm of uncertainty, but nothing in that list is uncertain. The big guys are overpriced. Federal Reserve policy, they should cut rates. Jerome Powell should go away. There's no significant change in the risk factor. If anything, it's going down. And tariffs are not hurting us, they're helping us. So I don't see anything here that would cause me fear. But I'm not the herd, and neither are you. And I can't control the herd, and neither can you. So we should use the herd to our advantage. So I trimmed the list from this down to this, and it mimics or it follows our overall strategy. You've got bonds, closed end funds, cryptos, minerals, metals. PHK is a PIMCO fund. FCO, the cough. FSCO is a closed end fund bond company, but it's really a business development company wrapped in a closed end fund wrapper. PDO is U.S. and international bonds. NBXG is actual uh, blue chips and straight stocks. PTY is still U.S. and international bond play. DOY and DSL are sister funds. They're laid out differently. They're both run exceptionally well. So I tried to really hone the list down into what I would pick. And initially was like, look, I would pick what we already have. I priced it out. Yes, this is our actual portfolio. And this is how much it would change based on what we would buy. So if we bought 200 shares, it would drop the overall price. What is that? 5 cents, or our average buy-in price. DSL would drop 13, 17 cents. FSCO would drop 9 cents. Yep. NBXG would drop, I don't know, what, 11 cents. And in the grand scheme of things, that's not that much. So then I was like, well, what other way could we compare these? And if we look at their overall net asset values through the turbulent last calendar year, tariff day, this dip, and everything else, if we look at their overall net asset values and see how they've performed and weathered the storms, that would give us a great overall insight into their overall financial well-being. So I knew about FCO because of the article that I showed last week, but this is what we're looking for. We're looking for a company who overall, say for a calendar, well, this is over 3 years, but if we look at the calendar year, we're still looking for a company that is that has a positive trajectory. When I was looking at a 3 year mark for a specific reason, I'll come back to that. If we look at BRW for the last calendar year, very up and down. I would still buy it, but it's just not the best deal in the sense of its overall net asset value has decreased a little bit. It's it's a if we had all the money in the world, or at least all the money to buy a package of every fund on the list, sure, I would buy another set of BRW. But for a 1,500 total investment, it's not the best deal I can find in the current batch. It's a great deal, but it's not the best deal. NBXG, well, look at the same idea. Over the calendar year, it's done decent. But outside the most recent dip, it's almost break even. I mean, so would it be a contender? Sure. Is it as great as FSCO? I don't think so. If we're looking for a calendar year, it's it's hard to play the nickel and dime game, but at the same time, FCO looks like a better trajectory, a better consistent trajectory. And yes, the price is going to go up and down, right? Liberation Day, super great time to buy. Now, similar great super time to buy. But the overall NAV trajectory is still up. DSL, same idea. Look for a calendar year. It's a great deal right now. It's just not the best deal. I mean, it's a super great deal. Triple asterisk, lower price, still pays an amazing dividend. It's just not the best deal. MBXG, it's a great deal. It's lower than our current buy-in price. They just had a dividend upgrade. Like they just increased the dividend. 2 cents doesn't sound like a lot, but it is. But it's just not the best deal. PHK, little different. Over a year, slightly down, not the same. PTY, overall for the year, pretty much break even. Like a little bit higher, but not by much. PTY. PDO, slightly different story. It's down a little, but at the same time, it's still up. And it looks like if we drew it on a line, it would be better than NBXG. It looks similar to FSCO, but it still doesn't look as good in the sense FCO still looks like its line overall has a little bit higher gain to it, but it's also just more consistent. NBXG has the curves, right? Maybe it's in the mix, and all of these are great deals. But I think this one edges them out a little bit. And the reason why I wouldn't pick PDO is what I've said all along. With more money pouring into the US market, it makes the US environment more appealing. And what I know of the international uh, issues right now, England is very uncertain. Western Europe is very uncertain. Germany is having their own crisis, right? With all of that international uncertainty, and with as appealing as the American market is, it makes it hard to go international. I think we can get rid of Gemini's feedback. So that leaves mainly US investment and all American investment. And I get the appeal of stocks. I mean, stocks traditionally go up. I get that. But if we're looking for the best deal with the best track record right now, I mean, this looks like a gain for sure. And it was close to hitting the $16 price point, which is great. And if we look back, right, like if we take the wide shot, overall, I mean, yeah, it debuted, then it dipped, and it's on the upward climb. And that's why this was in the wide view. I mean, you can see that upward climb. And then I don't understand. I can't explain the herd. I really can't. It's very hard to explain an illogical, irrational mind. That's where you and I can look at problems logically. Present us a problem, we'll figure out a strategy, and we'll figure it out. Is it a good deal? Is it a bad deal? Is it this? Is it that? And maybe we come out with different solutions, but at the same time, you and I are solving the problem. The herd is reactionary. Somebody, and yes, they are making their decisions. It's their decision to buy and sell whatever they're telling their broker or whether they're doing it on their own. But they're yes, it's their decision and their consequence. But at the same time, they're not making their decisions. It's their final say, but somebody else is pumping fear into their consciousness and they're getting swayed by the fear. So it's really hard to explain the irrational mind. You just can't. So I can't explain this. But at the same time, as much as I want to know why, oftentimes the why in the grand scheme of things isn't important. You just have to figure out what's the best thing for you to do or what's next for you. Like, why did this big giant thing happen? I don't know. But if you're so focused on that, you'll miss everything else, right? The, and I'm the same way. I so much want to know why, but the majority of the time, that's not actually the most important question. The most important question is what's next? Like, what do you do? How do you respond? And, and in that, it's really the same advice. I can't explain the herd. nor can I explain their fears. But I know that when they freak out and when they have this big temporary existential threat and they sell and the market dips, that's a great time to buy. And I know it's not a tariff day dip, but at the same time, it looks pretty close. So even though I would pick FSCO over everything else on the list, everything else on the list is down too. So, I mean, I would pick based on overall value and consistency. And yes, they raised their dividend, like out, and they their overall net asset value continued to go up during the government shutdown. Like I would pick all those things for FSCO. But if you own something else on the list, that's not to say it would be a bad decision. It's just not the best decision for me. You have to figure out the best decision for you. And if you already own something and you're going to scoop an amazing deal, then yes, do the best thing for you. Because at the end of the day, it's your money and your expenses and your retirement or however you're paying for your life. Make the best decision for you, whether it's this, whether it's FSCO, whether it's this list or something else entirely. Almost everything. I mean, I'll paraphrase this because I'm not going to get the exact quote, but Brett Owens said it best. After a dip, right? So tariff day dip or whatever we're in right now, whatever this dip is, you can pick almost anything and come out positive on the other side, right? Almost anybody should be able to do that because everything will go up. It just depends on your strategy and what you're invested in and what you're into and where you think the market's going. And not everybody's going to perform as well as everybody else. Saba does well, like all of these, right? All of these companies do well in general. So whether it's FSCO or anybody on this list or anybody else for that matter, do the best thing for you and go with it. And I get it. We seem to be in a dip because the herd is scared and they're more scared than normal. And the uncertainty that's getting pushed is the same uncertainty we've always been facing. So I wish I could explain it. I wish I could tell you why, but I don't have a great answer. The best answer I can give is that the herd lacks wisdom. They lack the ability to think independently. Because if they had the ability, they could do the same thing we just did. Pull up Gemini. Why is the market fearful? And they would see those reasons and they would be able to combat every single reason with logic and truth and realize that there's really nothing much to be fearful of. Are the big guys inflated? Yes, they always are. Can they easily sway the market? Yes. Does NVIDIA have anything to worry about? No. Would I invest straight in NVIDIA? No, because it's overpriced and I can get a better deal in a closed-end fund. Do tariffs impact inflation? No. Geopolitical risk is night and day different than what it used to be. We're in a much better position overall. So I don't have the same fears, and I don't think you do either. So the best advice I can give you is to approach it logically, to take the hurt out of it. Like acknowledge that we're in a dip for whatever reason, right? But to look at the current market and look at where you think the market's going and buy the best deal you can in this market that will also help you in the coming market, regardless of where it is, whether it's on this list or not on this list. Do the best thing for you and be able to explain why. If you're doing it because your gut thinks that's the right move, you've got to be able to explain it. And if so long as you can explain it and have it make sense. Now, somebody might not understand your knowledge of the market, that's different. But as long as you can explain it rationally to somebody else, And as long as it makes sense and it's not like, hmm, like, am I really second guessing myself? Something feels off. It's like, no, this is the best thing to do. Then do that. And we'll see what happens. And I don't want to sound blasé about it, but it's we buy it and we see where the market goes. And then we look at things week to week and we do the best thing we can, right? We do the best we can in general. So look at it logically, buy the best deal in this market for the coming market, make the best decision based on you and your needs and your portfolio. End of story. And for us, I mean, yes, it is. The best deal last week, the best deal this week is still FSCO. Makes the most sense. If we could buy everything on the list, that would be a different matter. We probably would buy everything on the list. Yeah. But I did the list based on a 1,500 investment just to, I mean, keep everything below 1,500 and also to compare dividends of what that would look like. Excuse me. And even though I love BRW, I mean, we own the most of that right now. 200 shares of FSCO would give us, I think, 1,900 shares of each. Um, no, 1,700 shares of each. 1,700 shares apiece. The biggest, uh, the two biggest individual breakdowns of our portfolio. So, or two biggest individual allocations of our portfolio. So take it for what you will. My choice for us is FSCO. Um, and then gosh, looking at the week ahead on my end of things, facing a week off from school, it doesn't mean it's an easy week. I've got a to-do list that I have got to get done. It's still it's always strategy. It's always financial strategy. We've got some big expenses coming our way, and it's figuring out how to make that work. And on the book end, it's figuring out, it's continuing the progress and maintaining the pace. And I've got some other stuff to do at home. So I know it's Thanksgiving week for everybody. Not everybody gets the week. Uh, and you might have to work Thanksgiving Day. And, and as frustrating as all of that can be, then you have family and friends and everything in the mix. So do the best you can. Be thankful for what you have. Be thankful you're alive, and quite honestly, be thankful that you have the problems you have and that you're able to directly combat them or directly impact them. So Thanksgiving week is always, I don't want to say hard, but everybody looks at it differently. For me, it's a lot of time with my family and the friends we're able to see. So on your end, I hope that it's a blessing to you. If you like my content, like the video, drop a follow, drop a comment, share it with a friend, and whatever you have for the week. I wish you a great week and I wish you a happy Thanksgiving. Bye bye, everybody. Yep. Have a great week.